New York City dweller. So I can see Bitcoin getting securitized into lots of different assets, and ultimately it'll spread to billions and billions of people, and they'll use it lots of different ways, and it'll spread to thousands and thousands of companies, and they'll use it lots of different ways. And the early adopters will be the visionaries and the ones that have the greatest incentive. Like, some people have a need. Hyperinflation is driving adoption, right? I mean, the reason that Bitcoin is popular in Turkey and popular in Argentina is because the alternative is not very appealing. If you convert all your money from local currency to dollars, put it in the local bank, and then the bank seizes your currency, converts your dollars back into the local currency and devalues it 10 to 1, then you're going to realize that simply buying dollars isn't a solution. So I think that adoption is being driven by a variety of things. I have a price model for Bitcoin, and my price model for Bitcoin is the price is driven by the monetary inflation in the fiat currency frame of reference. That's one part of it. If the currency is hyperinflating at 100% a year, you're going to see Bitcoin price in that currency going up faster than that, or at that rate. So that's the first driver, inflation, but it's a vector depending on the currency. The second driver is in this case the adoption of Bitcoin as a treasury reserve asset by the people and the institutions in the marketplace. So the more people that adopt Bitcoin, when you're a hodler, you've adopted it as a treasury reserve asset. People say, well, that's not using it. Of course that's using it. In fact, the single most important use of money is to adopt it as your balance sheet. If everybody on earth adopted Bitcoin as their primary treasury asset, it would go to $10 million a coin overnight, and then up from there. So adoption as a treasury asset is second. And governments can do it. Institutions can do it. Endowments can do it. Religions can do it. Families can do it. Corporations can do it, right? I mean, every entity with a treasury could adopt Bitcoin as an asset. And there's a degree, right? Is it 1% adoption, 5%, 10%, 50%, 90%, 100%? Obviously, the more adoption, the more power. So that's the second driver. The third driver is technology or utility, right? On the day that Apple says we built a Bitcoin signing device into the iOS phone or the iPhone, and now you can use your iPhone and your Apple Watch, and your MacBook is a multi-sig setup, or you can assign multi-sig between 3 members of your family with family sharing or something. When they do that and they make it instantaneous and easy, then you're going to see a big surge in adoption of Bitcoin, right? Technology drives adoption, and then you'll see a big surge in the price. Now, technology is not the only thing that drives adoption. What else drives adoption? Hyperinflation, right? Fear drives adoption. So hyperinflation is a marketing campaign for Bitcoin. Inflation is a marketing campaign for Bitcoin. Also, regulation. When the regulators say that Bitcoin is a commodity, an asset without an issuer, that drives adoption. When they actually approve a spot ETF, that drives adoption. When FASB approves fair value accounting, that drives adoption. So regulatory clarity drives adoption. Awareness drives adoption. Education drive adoption. Technology, it's more important that Apple adopt Bitcoin than it is that your mobile startup adopt Bitcoin, right? If Apple builds Bitcoin into the iPhone, that's more important than the fact that somebody that wants to launch the next WhatsApp built Bitcoin into their app. So the behaviors of Apple and Microsoft and Amazon and Google, they're just like nation states, really. If China embraces, China says you can own Bitcoin, right? The more of embrace from China, the more embrace of the EU, the more embrace of the US, the more adoption. So those are the 3 first order drivers, adoption, technical utility, and inflation. And then the second order driver is productivity growth of the people that have adopted it, right? In the extreme, and this takes you to the Austrian economics theory of sound money. If everybody uses our money, then the money, and if the economy grows its supply of goods and services by 2% a year, the money will get 2% more valuable each year, assuming the money supply is constant, right? So ultimately, it's not just about adoption, but like imagine the company that adopts Bitcoin also doubles their cash flows the next year, you see, right? So the productivity of the Bitcoin community will ultimately drive Bitcoin after we get through the first order effects. But the first order effects of inflation and utility and adoption, those things are going to dwarf every other factor. And all of these things are kind of a function of time, right? Right. One can say over time, information will spread, adoption will spread, people will build this into technology. Inflation is a function of time. So over time, you can say Bitcoin price is going up over time. The reason it's going up is because of utility, adoption, and inflation and productivity, because they're all functions of time. And that's my view on it. And as you can see, the real big question mark is what will each individual do? What will each family do? What will each institution do? What will each company do? What will every executive do? What will every nation state do? Everybody chooses how rapidly and how enthusiastically they adopt this asset class, and they adopt this network, and they adopt this protocol, right? Bitcoin it's It's an asset, it's a network, it's protocol, and it's an ideology. And it is defended by computer power, electrical power, economic power, and political power. And right now, it's growing at a very rapid rate. The computer power is 420 hash rate. It would take all the computers in the world to attack it. Electrical power is 12.5 gigawatts. The economic power looks to be about $550 billion if I calculate the basis of Bitcoin investors. That's how much money's been invested. You can get to that back of the envelope estimate if you just take the 4-year simple moving average and multiply by the outstanding supply, and that's a pretty good surrogate for, on average, what people have invested to buy their Bitcoin. And then the political power is 220 million people that own some of it, right? And I mean, that's Google's best estimate right now. I think it's growing by millions every month. I expect we'll be 1 billion sometime this decade. And of course, 220 million people with $550 billion invested don't want their money taken away. And that's what drives their political behavior, and that's what drives the network. So there we go.